Here's a summary of Coca-Cola's Q4 2025 earnings call, focusing on key financial metrics, future outlook, and leadership statements. Introduction and leadership transition. The call began with the announcement of James Quincy's final earnings call as CEO, marking the end of a significant tenure. He reflected on the company's strategic progress over the past decade, highlighting the expansion of their billion-dollar brands, strengthening of their system, digitization efforts, and fostering of a growth-oriented culture. Enrique Braun was introduced as the incoming CEO, with Quincy expressing confidence in Braun's leadership and passion for the company's future. Q4 2025 financial performance. Revenue. Coca-Cola reported 5% organic revenue growth in the fourth quarter, with unit case volume at 1%. Concentrate sales outpaced unit cases by 3 points, attributed to shipment timing and an extra day in the quarter. Profitability. Comparable gross margin and comparable operating margin both saw an increase of approximately 50 basis points. Earnings per share, EPS fourth quarter comparable EPS reached 58 cents, a 6% increase year-over-year, despite facing 5% currency headwinds and an increased tax rate. Full year 2025. The company delivered on its initial top-line and bottom-line guidance. Organic revenue growth was in line with their long-term growth algorithm. Unit case volume was flat year-over-year, but ended the year with improved momentum. Comparable operating margin saw strong expansion, contributing to 4% comparable EPS growth despite currency headwinds and tax rate increases. Free cash flow. Excluding certain payments, free cash flow for 2025 was $11.4 billion, an increase of approximately $600 million from the prior year. Free cash flow conversion remained strong at 93%. Geographic performance highlights. North America delivered strong results with volume and value share gains, driven by broad-based strength across their portfolio and successful innovations, like Sprite Chill and Coca-Cola Holiday Creamy Vanilla. Latin America gained value share and grew volume and revenue, with strong performance from Coca-Cola Zero Sugar and Sprite Zero Sugar. Santa Clara, a value-added dairy brand in Mexico, was added to their billion-dollar brand portfolio. EMEA achieved value share gains and volume/revenue growth. Europe saw a slow start but recovered, with successful holiday and Winter Olympics activations. Eurasia, Middle East, and Africa also grew volume, supported by local innovations and impactful marketing campaigns. Asia Pacific gained share and had flat volume, though revenue and profit declined. Volume growth in Japan was offset by softer consumer spending and weaker industry performance in other regions. 2026 outlook and forecasts. Organic revenue growth. The company projects 4% to 5% organic revenue growth for 2026, consistent with their long-term growth algorithm. Comparable currency-neutral EPS growth. Expects 5% to 6% growth, excluding acquisitions and divestitures. Divestiture impact. Anticipates an approximate 4-point headwind to comparable net revenues and a 1-point headwind to comparable EPS from divestitures, assuming the closure of Coca-Cola Beverages Africa and the divestment of Chi in Nigeria. Currency impact. Forecasts a 1% currency tailwind to comparable net revenues and a 3% currency tailwind to comparable EPS for the full year 2026. Underlying effective tax rate expected to be 20.9% for 2026. Overall comparable EPS growth projects 7% to 8% growth from the 2025 comparable EPS of $3. Free cash flow anticipates generating approximately $12.2 billion in free cash flow for 2026. Significant risk factors. Macroeconomic pressures. Continued macroeconomic challenges, particularly on lower-income consumers, were noted. Geographic volatility. Challenges in markets like China, India, and Mexico, due to new taxes, present ongoing volatility. Consumer spending. Softer consumer spending in certain regions, especially in Asia Pacific, is a concern. Commodity volatility and global trade, while manageable. Volatility in certain commodities and evolving global trade dynamics are factors. Regulatory environment. New taxes, such as in Mexico, and regulations like SNAP changes in the U.S. can impact business. Currency fluctuations. While a tailwind is expected in 2026, ongoing currency volatility remains a factor. Key strategic priorities and focus areas for the future, as outlined by Enrique Braun: accelerating recruitment, stepping up consumer recruitment, particularly among young adults, through better integration of marketing and commercial execution. Improving speed to market and consumer closeness. Enhancing innovation speed and deeply understanding consumer insights to shape future growth opportunities. Digitizing the enterprise. Placing digital at the core of all consumer, customer, and system connections. Expanding billion-dollar brands. Continuing to increase the number of billion-dollar brands and grow existing ones into multi-billion-dollar powerhouses. Product quality leadership. A continued focus on delivering high-quality products. Revenue growth management, RGM sharpening RGM capabilities to adapt to varying market dynamics. Investment in bottling partners. Reinvesting capital from refranchising back into markets and supporting bottling partners. CEO and CFO statements. James Quincy, outgoing CEO, emphasized his pride in the company's decade of progress across their 4 strategic priorities, leading to significant shareholder value creation and outperforming the consumer staples industry. He highlighted the strong foundation for future growth and expressed full confidence in Enrique Braun's leadership. He also clarified his new role as executive chairman, involving support for the CEO and board-level strategic issues. Enrique Braun, incoming CEO, thanked James Quincy for his leadership and legacy of returning the business to growth. He acknowledged the complex external environment, but highlighted the company's ability to deliver on guidance and gain value share. Braun outlined his vision for the future, focusing on stepping up innovation, getting closer to the consumer, and embedding digital throughout the organization. He expressed confidence in delivering on 2026 guidance and capturing future opportunities. John Murphy, CFO, reviewed the 2025 financial performance, highlighting organic revenue growth, margin expansion, and strong free cash flow generation. He provided detailed 2026 guidance, including revenue and EPS growth expectations, along with currency and divestiture impacts. Murphy also discussed the company's capital allocation strategy, emphasizing reinvestment in the business, dividend growth, and opportunistic acquisitions. He also elaborated on the drivers of the Q4 mix impact and the company's approach to foreign exchange. In essence, Coca-Cola delivered a solid Q4 2025, meeting guidance despite a challenging environment. The company is looking ahead to 2026 with optimistic but prudent guidance, signaling a continued focus on balanced growth, innovation, and leveraging its strong brand portfolio and system reach under new leadership.